You can't live in it, you can't rent it out, and you can't even sell it. This is the reality behind Calgary's 2025 condo nightmare. Calgary's condo market has shifted into a buyer's market due to a surge in new listings, softening demand, leading to declining prices in both the pre-sale and resale segments. This completely contrasts the previous years in that hot sellers market. One of the biggest reasons in that resale condo market, resale condos in Calgary are currently characterized as high inventory in a cooling space. Market conditions are now balanced, edging into that buyer territory, with months of supply climbing significantly, sitting right at around 5.5 months, a sharp increase from previous years. Prices, the overall benchmark price for apartment condos, continues to decline month after month, with prices now sitting at $309,300, down 7.2% year over year. Price declines are most pronounced in areas with high inventory, such as the Northeast. Sales and inventory have decreased year over year, down 28% as of the end of November, while active listings have grown substantially, up 28% as of the end of November. This has resulted in more choices for buyers and longer days on market. Buyers have that current advantage. They have more negotiating power and don't face as much pressure for bidding wars like we've seen in the past. Well-priced, move-in ready units in good locations are still selling, but overall activity in this segment has significantly decreased. The pre-sale condo market is seeing these similar challenges, with potential implications for future supply. Oversupply is a major concern. The ongoing influx of new condo units from projects currently under construction, which is contributing to the high inventory levels. Developer incentives are attracting a lot of buyers, a stark change from the previous years, as demand struggles to keep pace with supply of the new units. For a future outlook, industry analysts suggest that well prices will likely continue to decline over the next 6 to 12 months. The current financial non-viability of new projects means builders are hesitant to start new developments at a loss. This could lead to a significant lack of new pre-construction inventory after 2026, potentially paving the way for market to recover later on. Calgary is experiencing a significant purpose-built rental boom. At the end of Q2 in 2025, we saw over 11,000 projects underway. This high-level activity is a record for the city and amongst highest in Canada. With over that 11,000 purpose-built rental units under construction in the city of Calgary, which accounts for nearly half of all dwelling units being built. This number is a 44.8% increase year over year. 37 different purpose-built rental projects were actively under construction as of late 2021, with a current, more recent number of projects likely higher given the increase of units. One report from early 2025 indicates 6,928 units were under construction at that time, showing a significant increase in activity through mid-2025. In the first half of 2025, 71% of new apartment starts were purpose-built rentals, indicating that rental is the dominant form of multifamily construction currently underway. There are approximately 22,000 rental units approved or in development pipeline beyond those already under construction. Much of the new construction is concentrated in the East Zone and inner city areas like the Beltline and East Village. The city also has a program to convert vacant office space into residential units, with 21 projects approved to create over 2,600 new homes, many of which are rentals. Now, after back-to-back years of sharp rental increases, Calgary experienced its first rent price decline since COVID-19 pandemic during 2025. In January 2025, rents saw a 6% decrease year over year, The average one-bedroom rent dropped to $1,600 per month, and two-bedroom rents fell 7.2% year over year. While some data showed year over year declines in the middle of 2025, monthly data from May and August indicated increases for some unit types, particularly in furnished ones. Continued drops in late 2025. During October, rental.ca reported that one-bedroom units saw a 5.9 decrease year over year to 1675, and two-bedroom units fell 7% to 2,068. Rent data from November 2025 shows further downward movement, with one-bedroom rents averaging 1,488, and vacancy rates are on the rise. A surge in purpose-built rental construction contributed to the vacancy rate jumping from 1.4% in 2023 to nearly 5% in 2025. This increased supply has given renters more options and negotiating power. We're even seeing some instances with buyers that have bought those condo units 2 years ago are now coming up at possession time, and the appraisals coming up on those units are completely different than what the purchase price was, and they need to come up with that difference or they can't close on it. We're even seeing instances with builders with the unsold inventory in the same building that you purchased yours in 2 years ago. They're now putting it on MLS, and it's at even a cheaper price than what you bought yours at, and it has more upgrades or a bigger unit and shows a lot nicer, selling at a lesser value than what you bought yours at because they need to get those units sold. Real estate is an investment, and sometimes when you're making those investments years in advance, you have to understand the risk that's associated with that. And this is exactly what is involved with it. You might be buying at a certain price then, and the bank is valuing it as something completely different, and there's no renegotiating with the builder at that point in time, and you can't just walk away from it. If you want to walk away from this deal because you can't close, you're forfeiting that deposit, any money that you've put down in advance, or even putting yourself in potential positions of lawsuits with the builder. So forecast for the remainder of 2025, we are going to expect continued moderation. Experts and recent data suggest that rental prices will continue to moderate through the rest of 2025 and potentially continue to decrease. Stabilizing but not crashing. The market is stabilizing after years of aggressive growth, but it is not collapsing. Supply remains key. The ongoing completion of new rental projects will continue to keep supply elevated, giving renters more leverage. So if you're thinking of getting into the market and you're considering some of these condo projects, you need to do your research and you need to understand exactly what you're getting into. You can't look at these as short-term turnarounds in a 3 to 5 year plan. You have to fully understand that if you're going to be getting into the condo market currently, you have to be looking at this as potentially a 10-year plan. What am I going to do with this unit over these next 10 years? How long do I want to be in it? And can I potentially rent it out during a certain point in time? And how much can I potentially rent it out for? These are all things you need to be considering. If you're thinking that you're going to turn around in 5 years and sell it and make $75,000 off of it, currently everything is not trending in that direction. So you need to have a more long-term plan. And that's exactly what we can do. We can sit down, look at all the data, put that plan together. If you want to book a call with me, click the link in the bio. Thank you for watching.